After contemplating this idea for months, we finally decided to sell our 2011 Toyota Yaris for $5,500. The demand for used cars is extremely high right now. In fact, the average price is 50% higher than it was a year ago. This is largely due to the microchip shortage as well as supply chain issues. So the timing of us doing this seemed really perfect. Now with the money, we had two choices. We could put it against our credit line, or we could invest it into some stocks. After weighing the two things, we decided, you know what? The stocks is a great way to go because it's only going to grow.
Volatile week for stocks with the majors closing with these devastating numbers.
I'm talking about this miserable month of April, where the Dow plunged more than 1,700 points, S&P plummeted 9%.
So that part of the plan is not going so great right now, but thankfully that is not the entire plan. And I'm going to tell you my magic number, which is helping me keep calm and not regret that decision. But first, I hope you and your investments are doing well. My name is Steve. I am a dividend stock investor putting $150 every week into my tax-free savings account to grow some passive income that I can tap into down the road. Be sure to like this video at any time and drop me a comment and share your thoughts. So selling a car to buy stocks does seem pretty dramatic, but let me give you the full story. For the last 2 years, the Yaris had been sitting in the driveway pretty much during the whole pandemic. Just sitting there, not being used. We took off some of the insurance off it, but we had to keep the accidental. And so it was costing us money. So we had to kind of decide what we want to do with it. So this year we decided that, you know what, let's actually drive it again. So I went to get it serviced, and it then cost us $1,000 to get the brakes replaced because, you know, they got a little rusty sitting there for a year. So we turned to not be coming ahead in this whole venture. After all, I'm sure we're probably still a little bit ahead, but not as much as we thought we would be by not driving the car. Now we do have another vehicle, a Nissan Leaf, which we bought in 2019, which will be our main vehicle getting around town now. And because it's electric, I hate to brag, but we are saving a lot of money at the pumps right now. And going down to one vehicle so far has been pretty easy. So far, no bumps on the road. Although it is construction season, so there's plenty of bumps, potholes. Buying stocks with the sale of the car instead of paying down some personal debt, I feel is justified this way. Our last interest payment on our credit line when it was around $7,000 was $12. Now, of course, the interest rate then was 2.69%. The interest rates have gone up to 3.7% on our credit line, but then the balance is down to around $4,000. Which, unfortunately, it ends up equaling again $12 that we're going to be paying in interest this coming month. I didn't want to see that money from the car just disappear. I wanted to turn a depreciating asset into an asset that was actually growing money for me. So instead, I took the $5,500 and I purchased an ETF. I chose the Vanguard Canadian High Dividend Yield ETF, BDY. I picked up this ETF on Wealthsimple Trade for an average price of $47.86. And from the 115 shares I was able to buy, I can make roughly $13.22 in dividends on owning those ETFs. So we're coming out ahead doing it this way. Right now, the difference is $1, but as we pay down the credit line, which we do every week, the difference is going to keep growing because I will keep getting paid those monthly dividends of $13, $14 a month. Not to mention that ETF BDY has grown by over 22% over the last year. Since its inception, it's actually grown 10% per year. So I am not panicking as I see in the first week myself lose $300. Nothing to worry about there. Instead, I have my magic number, which I'm going to tell you right now, which is $11,000. Double what my initial investment is. When buying and selling stocks, only two numbers matter. The value of when you bought it and the value of when you sold it. Everything in between is just noise and to be ignored. That is why I can put $5,500 in now and know that in 7 years, based on 10% increase year over year, I'm gonna hit my $11,000 goal. Just have to be patient, leave the money in there, and let time and interest do its work. So we might see the value of our stocks decline for weeks, maybe months at a time, but historically, the stock market always recovers, and we just have to be patient. Your second number, which is ultimately your goal, is going to be a lot different than mine, but that is the number that I want you to always be focusing on. Where do you want to be after X number of years? Now, the best way to get you there is to pick some good quality stocks or ETFs, which is why when I was determining what stocks to buy, I took a look at these ones here, which you can see in this video, where I take a look at 3 Canadian high dividend yield ETFs that I want to consider for growing my wealth. That's it for this video, guys. Keep it in the green, stay safe, and we'll see you in the next one. Bye.